Hello and hi, I'm Jamsinian and my metric number 2021568603. Today I will explain for the question 3. Briefly, explain the meaning of the rule under section 57 on insurance cover for clients' money in reference to the valuer, appraiser, estate agent and property manager, Act 242 and rules. Insurance coverage is an amount of liability that is protected for an individual or entity through insurance services. In general, the most common of the insurance coverage types are auto insurance, life insurance, homeowners insurance, and so on. The insured person is responsible on insurance coverage for paying premiums to the insurance company. Refer to the valuer, appraiser, estate agent and property manager Act 242 and rules under section 57 on insurance cover for clients' money is provided that a firm that has been a registered firm is not allowed to receive an amount of money from a client or handle an account from a client when carrying out its duties unless there is an arrangement or instruction from the party invoice where there is a failure to account for the money to the client and the liability must be paid by an insurer. Provisional indemnity insurance refer to the client that not happy with the service that provided or a firm has made any mistake which costs clients money, then need the firm to pursue for compensations. So that a firm handle the client money, they will need to have a dedicated client account or money protection insurance. The requirements of the code that a firm need to handle client money in most separate bank account is client account must separate to firm's main or private accounts. Content only for client's money and must held at least one with a bank or building society authorized by the Financial Conduct Authority. It also need written confirmation that all money in the account is client money. Bank or building society is not entitled to combine the account with other and cannot take the money from the account. The board is authorized to issue guidelines for the purpose of invoicing regulation on insurance coverage for customer money includes the money must deposit the client without delay. So the purpose is to look after the customer's money on behalf of the customer. Then the insurance cover must be based on full civil liability and it should be retroactive where possible.
Assalamualaikum warahmatullahi wabarakatuh. My name is Maizatul Aina Farah binti Karim and my metric number is 2021337973. So I will explain about the question number 4. The difference between registered appraiser and registered valuer. So, registered appraiser refer to the individual whose name has been entered under Part 2 and to whom an ATP, authority to practice, under Section 16. But for the registered, refer to the individual whose name has been entered under Part 3 and get the ATP under Section 16. Registered appraiser is registered under Part 4 of the Act due to long experience and earlier registration under the various appraiser act. For the registered valuer is registered under board after has complete the working experience and the oral examination. Registered appraiser can practice valuation and property management but have a limitation on geographical area and value. But for the registered valuer, can practice valuation and property management with no limitation on value, also free to value any land in Malaysia. Registered appraiser exists before the independent, and then registered valuer exists after the independent. So registered appraiser is a registration number with the board, is a follower by a few digits. And then for the registered valuer is a registration number with the board, is denoted with the by V followed by a few digits. So next, the difference between the probate valuer and registered valuer. So probate valuer is a refer to the individual whose name has been entered under name has been registered as a probate estate agent under the Act 242, and whose name has been placed in the register of probate. For the registered valuer is a individual whose name has been entered under Part 3 and get the ATP in Section 16. Probate valuer have obtained practical experience but do not sit and pass for the TPC yet. Registered valuer already sit and pass for the TPC. Probate valuer cannot open their own firm or agency, but for the registered valuer can open their own firm or agency. So probate valuer cannot sign any valuation report as not yet competent, but registered valuer can sign any valuation report due to the competent. Probate valuer is a registration number with the board, is denoted by PV followed by a few digits. And for the registered valuer is a registration number with the board of valuer appraiser estate agent, is denoted by V valuer followed by a few digits. So next, the difference between these three items, which is broker, real estate negotiator, and registered estate agent. So broker refer to the individual or firm that charge a fee or commission for executing buy or sale order submitted by investor. Then for the real estate negotiator is an individual whose work under the supervision of a registered real estate agent or firm. And then for the registered estate agent is an individual who's acquired a professional estate agent registration with board and with board. So broker is a unregistered and unauthorized under board. Real estate negotiator only certified recognitions by board. And registered estate agent is registered and authorized under board. Broker is illegal due to not sit or pass for the TPC. Real estate negotiator, legal negotiator, must attend but must to attend 2-day program call it NCC, negotiator certification course. And then for registered estate agent is a legal as already sit and pass for the TPC. So broker normally is not protected by Act lah, but for the real estate negotiator and registered estate agent is protected by any Act. So that's all from me. Thank you.
Assalamualaikum. My name is Iswan Umaira binti Hairi and my metric numbers is 2021539629. So today I will present for question 5, which is the importance of professional indemnity insurance for each registered valuation firm in Malaysia. First, the definitions of professional indemnity insurance is to protect the company from third-party claims for financial losses caused by a failure to fulfill professional responsibility. It is designed to safeguard professionals against damage and compensation. Business must have professional indemnity insurance to protect themselves from any negligence. Professional indemnity insurance also is an important part of managing a valuation organizations. It helps to protect the business from any claims made against it, either by outside party or other valuation companies. Claims made professional indemnity insurance can be provided to valuer businesses and must be in effect at the times the claims is made in order for it to be covered. It also helps to ensure that all of the team's work is accurately evaluated and complete in accordance with industry standards. Move on to the next slide is the importance of professional indemnity. So the first one is to protect their reputation, which is professional indemnity insurance can help business protect their reputations from legal actions, and quickly responding to claim can improve the outcome. The second one is to protect against financial. It is important to have a proper professional indemnity insurance coverage to protect against financial losses from mistakes made when offering expert service. The third one is cover according to policy, which is professional indemnity insurance cover carelessness, duty breach, and civil responsibility, such as service interruptions and costly court expenses. Also, the insurance contract can cover losses from lies, document loss, mistaken breach of confidence, and legal cases. Last but not least is to protect firms from business risk. It is important for the firm to have insurance because insurance protect valuation firms from business risk and undesirable outcomes. That's all from me. Thank you.
Assalamualaikum. My name is Farana Munira binti Muhammad Khairul. My matric number is 2021928137. So I'm going to explain 5 types of misconduct and ethics of registered valuers and appraiser. So the first is Rule 63 in Act 242, which is conduct of registered valuer and appraiser. Registered valuers must act in fiduciary capacity for their clients, keeping the results and other findings in their works and any report confidential until they are relieved of their duties by their clients. For example, when a registered valuer or appraiser performs property management work, he must keep a record of the scope of responsibility that the client has authorized and shall not exceed that authorization except in emergency. Next, Rule 64 states that registered valuer or appraiser acting as estate agent. If a registered valuer or appraiser act as an estate agent for a vendor in a transaction, the registered valuer or appraiser should not value the property for the purchaser after acting as estate agent for the vendor. For example, if a registered valuer or appraiser from a registered firm act as a real estate agent for a seller in the transaction, other registered valuers from the same business are not permitted to participate. Assume a customer used the service of an estate agent from one company to sell his home and now wants to hire a valuer from the same company to determine the value of his home. The registered estate agent is in violation of the Code of Conduct for Registered Valuers and Appraiser Act 1981 if a registered valuer from that company handles both estate agent and valuer transaction from the same client. Other than that, Rule 65 states that personal interest to be disclosed. The registered valuer or appraiser must disclose to the client any financial ties, business interests, or any relationship that may be related to the client's service. For example, he must be completely honest with his client when serving as property manager and provide them with all pertinent information. The registered valuer and appraiser code of conduct, for instance, may have been broken if a valuer offered valuation services simply because his client was his father. Any interpersonal or professional disagreements between the valuers and the client should be put on hold in order to provide their clients with professional assistance. without first disclosing the interest to the client and obtaining their express written consent, the registered valuer or appraiser shall not award any contract on behalf of his client if he has a financial interest in the contract or a relationship with the contractor. Next, Rule 67, which is fee contingent on result. A registered valuer or appraiser cannot be charged, imposed, or compensated for professional labor whose monetary value is contingent on the job's findings or outcome. For example, the contingent includes the value of property in relation to professional work that has yet to be determined, as well as a case in court or arbitration or a disagreement affecting the conclusions or result of complete work. 69. Receipt of payment from more than one source, which is no. Lastly, Rule 69 state receipt of payment from more than one source. Lastly, Rule 69 state receipt of payment from more than one source. No registered valuers or appraisers will pay anyone who refers a client to them in exchange for a commission or in any other way. For example, consider the scenario where someone refers a client to a valuer and receives a commission from the valuer for doing so. Lastly, Rule 69 state receipt of payment from more than one source. No registered valuers or appraisers will pay anyone who refers a client to them in exchange for a commission or in any other way. For example, consider the scenario where someone refers a client to a valuer and receives a commission from the valuer for doing so.
Hello, hi, Assalamualaikum. My name is Nulana Atira bin Sabri. My number metric is 20211105999 and I will explain about question 7. Question 7 asks, with examples, state 4 matters forbidden for advertisement for any registered valuer or registered valuation firm. In Act 242, in Rules 111, states the matter that forbidden in advertisement for any registered valuer or registered valuation firm practices. The first one is Rules 1111A states that the advertisement should not contain an inaccurate or misleading statement of fact. Such example, the estate agents advertising a property at a price that is significantly lower than the actual price or hiding additional fees and costs that are associated with the property. This will become a bad reputation for the registered valuer or registered valuation firm practices. The second one is Rules 1111B of Act 242 states that an explicit solicitation of instruction, for example, registered estate agent insert the phrase, "Let me help you find a home," or close that sale for your property on that advertisement. That is obviously forbidden for official advertisement. Other than that, Rules 1111D states a claim by the registered valuer, appraiser, or estate agent to be specializing in or to be a specialist or expert in any particular aspect of his work, such as a registered valuer cannot advertise his or her expert in valuation. The last one in Rules 1111D states that the advertisement shall not contain self-laudatory statement like, "We may be able to save you from future worries and needless expense through our services," which is obviously arrogant, self-laudatory, and implies that the firm can provide a professional service that others cannot. That is not allowed in Malaysia. As a result, it is obviously not circumspect, discreet, or dignified. The words also appear to discredit other registered valuer, estate agent, and property managers by using the word "we," which is represent the valuation firm, which is he or she represents. The quoted language is a claim rather than a statement of fact. That is all from me. Thank you.